Hey, Steve, Andy, how's it going?
Hello, Scott. Hey, all right, Andy.
All right. Hi, Scott. Hi, Steve and friends out there.
All the usual suspects. I can't believe another week has come and gone, but it has. And so this is the afternoon webinar, Trade Ideas, fashioned after the weekly email that goes out, Trade of the Week, which this week did not fire, but we'll talk plenty about that going forward. So just getting into it here, the old reminder of the disclaimer page. We're a software as a subscription company. We're not registered investment advisors. We're not brokers. We have not been licensed with the ability to give out financial advice. So anything you see or hear today is just an opinion. It's not to be construed as financial advice. Get that out of the way. The reminder that the Trade Ideas community, we do our best to really try and be as available as possible to help with the learning curve, because learning this product is not going to happen in just a couple short days. Even the test drivers, a lot of people that take the 5-day trial and have not really scratched as deep as they want to go into the program. Scott will have some promo codes available at the end of this webinar to do what a lot of people do, which is take another 30-day subscription using a promo code to really get familiar with the program. It just can't happen in a few days. So keep an eye out for a promo code coming to help for those that want to go another 30 days and keep continuing to learn. But we'll do our best to give as much information in as short as time as possible. Every week we've got a lot of stuff going on around here, starting with Barry's trading room. It's going on every day from bell to bell, even earlier actually, as they scout the market out each morning and look for some of the new stocks that might be in play that day. There's probably 400 or 500 people at any time that is in that room, and a handful of really good traders that have kind of taken the lead to help Barry with a lot of the content and the eyes and ears of pack hunting in that room. It's a free room, so there's really no reason not to check it out. You don't have to pony up a credit card or anything like that to join the free live trading room with Barry, and he does a lot of good customer service, giving information on how to use the product. Don't be shy about going into Barry's room and asking him to demonstrate something, because he'll do that. He tells the people in the support staff a lot. If somebody comes into the live chat room, please send them into the live trading room, and then I can demonstrate, because I'm all set up and happy to show them. So we have that going. We have the afternoon webinars, which I helped Jamie with yesterday and myself today. Tomorrow will be the Q&A webinar with Dan and Brad. They'll talk about some of the upcoming features. Thursday this week, Trading Studio is canceled, but next week we'll return with Andy giving his synopsis of the trading day and sometimes creating a new scan or some new ideas. So those are the afternoon webinars, and then of course the next slide shows us during the mornings each week we have a recurring class. It starts on Monday and finishes on Thursday of each week. And then on Friday, I should back up and remind you, on Friday we have this thing called TI Live Technical Support. If that thing would get out of there, that menu would get out of there. It's a 3-hour open session. You can come one, come all from 11 to 2 Eastern, that Friday support session. We just make ourselves available for as long as needed every Friday. There's 4 of us in there that know how to use the program pretty well. We can do a lot of answering of a lot of questions and help with some scans and things like that. So then the last portion, of course, is the TI University, which this week we've kind of made open content to accommodate the people coming in and that have a lot of immediate questions. But any other given week, we are doing this pre-conceived curriculum with the basic beginner stuff on Mondays, and then more intermediate in advance as you get into Wednesday and Thursday. So that's also free for anybody that wants to, even use that to kick the tires and see if it's something that you might want to invest in. Come, by all means, come check that out as well. All right, so let's getting into the man and machine combined. Are you thinking of doing more AI Thursday on stuff? Yeah, Mike. Mike asked a question. Our formulated afternoon webinars, they do kind of follow a formula. And now that Brokerage Plus is becoming more and more ubiquitous with our users, we certainly are going to be carving out some time in the afternoon webinars on a weekly basis that would be devoted to that. And so far, the talk kind of has been, it's not official, but Andy will make that announcement if it needs to be, but Thursday might be the right day to do that in the afternoons to start, since he and Jamie are both pretty adept at that as well. So back to our, did you have a
Yeah, well, I also wanted to say, and also we'll probably be adding it to our TI University on Thursday as well. So we'll
Correct.
be start covering some of that too on in our TI University.
A little of both on Thursdays
Mhm.
for sure.
Sure.
All right, so man and machine combined is the theme for the weekly webinar that we do here. It's a reminder that the world in which we're going to be moving into shortly is going to have a lot of AI and machine-assisted living in terms of helping us curate large sets of data. Again, like if you have somebody you know in the family who's made a comfortable living working in Manhattan on in front of a spreadsheet looking at large chunks of data, I would be a little nervous if I was them. The machines and the AI are coming to get them. So the world's going to change over here in the next 3 to 7 years, especially in a career-minded path. If you've got a lot of data that you're managing, get ready for a lot of the curated stuff coming our way. That's where the real value is. Curating the data and presenting that to us, the humans. And so that is where we have the man and machine combined, whether it's using our AI facility program or creating your own scans to let the Trade Ideas platform show you a list of ideas and present you a list of ideas. And the human being is ultimately going to be the decision maker in a discretionary fashion at some point. And that's the world in which we're moving into. So that's our theme. Again, we do have a lot of test drive people in the webinar, I would imagine, this week. So we're going to mix it up a little bit. I'll do the market recap. I'm going to use the word rejected. You'll see why. There was a very low trade count today in the Holly AI, and you will have a few thoughts on that. And then our theme, the trade of the week, was a symbol TEL, which failed to trigger, but I think we all know the reason why that probably happened. Since Monday morning the bell rang, we've had a lot of volatility, especially overnight gap down volatility, and then today trading volatility to the downside. So it did not fire and probably won't, but we'll talk about a few items anyway. And then this week, I think what I want to do is, and I'm going to set this up right now for anybody out there that might want to participate in this, maybe in about half an hour or 25 minutes from now. Let's call it 20. If somebody wants to give us in detail a scan, like, hey, I'm looking for stocks that are above their 200-day moving average, but are still trapped in a 10-day range and VWAP, blah, blah, blah. I mean, there's 9 million different ways to approach the market, and we always see different approaches come through when people ask us for scan help. So what I'm saying is here in about 20 minutes, we'll open up the floor, and I'm sure a few people might have an idea of a scan they might want help with, and I can demonstrate, from soup to nuts, from beginning to end, how we might go about developing that scan and configuring that scan based on what we're looking for. And then we can take that scan to the next level and show the back testing module and how we can try and refine and get better results from using the back testing optimization. So this is kind of a demonstration for the test drive people to kind of jump into more advanced stuff, and we'll take some time in this afternoon's webinar to do that. So and then we'll end if there's any open forum, open floor, kind of like Jamie did yesterday, Q&A, anything goes. We're here to help also answer those questions. So we'll start off with market recap, which we always do. And what we've been talking a lot about the last couple weeks really is that this market has just been hell-bent on coming up and testing that orange line. If you recall, that orange line has been drawn off of the prior all-time highs back here in September of last fall. And so we've spent a lot of time down here in a bear market for a day and a half, but then, grinding through all of the gates and the hurdles that were placed in front of the bulls, and the bulls accomplished each one of them in good fashion. But I kept saying, when we get to this line, and we're going to get to it, I don't know how we're going to get there. If we're going to take a back road and pull back and then, have some energy to try and push through, or if we're just going to creep out on the tree branch here and see what happens when we get there. But when that happens, there's never really any energy left to get through any conviction of our said resistance technical levels, which was that. So rather than getting a pullback before, we kind of got the volatility and the pullback after. And I want to highlight something here. If we zoom in real close, this orange line again corresponds, and I don't know if you've noticed this, Andy, but it's kind of interesting. What we kept saying is we want to see closing prices above the hurdle that's put in front of it. not an intraday reversal. And so we literally have yet to see a closing price in the S&P 500 by way of the SPY proxy here. We've yet to see a single day where the candles closed, traded above, and stayed above and closed and stayed there after the bell. Here's a wick there. I mean, this is just perfect textbook numbers here. I mean, computers run the market these days, so it would make no sense. It would make sense that computers know exactly where these levels are. There's a wick there, couldn't get through and close. Here we opened up here last Thursday or Wednesday and couldn't even come close to trading above. We closed down here. And we've got last Friday, once again, a little wick. So each day, 3 out of 4 days here, the body of the candle could not get above and close above the respective all-time high. So what happened was we got our volatility and our pullback on the back end instead of the front end in anticipation. Exactly what we thought might happen when you run into these levels with no real pullback, the ability to garner some strength, give the troops a warm shower and a warm meal, and have some agility and some strength and potential energy to move back up and through. We didn't get that. We came and we kissed that level for 4 or 5 days and had no demonstrative demonstration of a close above that key level. So therefore, the volatility came back, and it did with vengeance, because the last 2 days have been really crazy. I mean, we went down this day, believe it or not, even though it's a green candle. We were closed up here, and we finished down here. This was a down day on a giant green candle. You don't see that too often. And then today we gap down, and we gap up, and then reverse it again for the most part with a red candle. Now, this had a really miraculous close in the last 5 minutes. A lot of this was gained back. But, you know, I noticed something, and
that was a gap down, by the way, Steve.
It was a gap down, yes, a gap down, thank you. Gap down, but look at that. We had the same kind of thing back here. You don't see it too often, do you?
No.
Giant green candle followed and covered up the very next day, not covered, but at least followed up by a giant red candle. Well, what happened the day after that? That's the first thing I want to know. A little dancing doji. That's kind of what I might expect possibly for tomorrow. Where are the two levels of interest on this pullback? Well, we almost kissed the first one today. The first one in my mind being the 50-day moving average right there. Kind of almost wish we did tag it. It would make today look a little better, but we still may want some of this follow through to the downside. We will see. The volatility is definitely back, but that's scenario number one. Scenario number two, you know, there's this giant gap back here that could be filled, and if it is going to be filled, you know, that's going to bring a candle down to these levels. You know, if we have a close that looks kind of like that tomorrow with a green candle, that'd be a pretty good, in my book, that would be a pretty good example of a pullback, or as you guys have heard me say in the past, a shower, not just a simple monkey bath where you splash in your face in the bus station gas water closet, but a good, meaningful shower. Get in there and get clean. So maybe another day of selling might do it. I don't know. Pretty big volume spike today, huge volumes. There's also a case to be made that could have been the worst of it. We look at the buying that came in here towards the close. That's a pretty big spike when you look at it, that last half an hour. So that last half an hour gave a bottoming tail, but you guys know as well as I do, we have an overnight session tonight in the future, and all bets are off. Anything can happen overnight. We could get ourselves another giant gap down or up in either direction tomorrow. But what I'm seeing is really constructive pullbacks here, all right? And it's doing it exactly where we thought it might do it. I mean, did you catch that, Andy? These wicks trading above, they just
no. I knew we were dancing around it, but I didn't know they were like closing just below it each day. That's what's wild.
They would not. They will not. They being the big they would not let the market close and have a meaningful close above that summit. Can't get it. So got nowhere to go but pull back. This has been a meaningful pullback, you know, but there's still a couple of targets there. That blue 50 period might come into play, and that gap is also looming pretty large. All right. So those were the thoughts I had on the S&P. As far as the Qs go, the NASDAQ, let's take a look here. In no man's land on the moving average levels there. The Qs have been the one that have been leading us higher, though, so we would expect to see probably not as much of a deep of a pullback as the rest, because they're going to try and hang on as much as possible. But nonetheless, same thing, a down day on a green candle here. That's kind of goofy. So two real big down days and a little bit of a bounce. Also good volume there. Let's look at the bigger picture. and draw that line of the prior all-time high, and I bet we might see something interesting. We didn't get it. We didn't close back above it, so we're down below the pivot level. In the NASDAQ, we are now back into the slushy part of last fall where we were making new highs back here. Made brand new highs last 2 weeks, but we're sluggishly falling back into the range there. Let's see what the IWM has always been bringing up the rear. Two funny green candles the last couple of days, meaning giant gap downs and trading up, trade up, gap down, trade up. So just a big swashy mess here. Nothing really much to go on, but of course the bigger picture still looks kind of intriguing. Kind of a delayed, cup and handle there. If the market can find its footing in the next couple of days this week, I would expect this IWM Russell 2000 small caps, maybe try and play some catch up because they have a lot of room between where we are and where the all-time highs were back here, which the NASDAQ, of course, has already captured, which the S&P is flirting with. And lastly, we'll look at the Dow. Not quite there as well, but nobody really looks at the Dow anymore, quite honestly. It's mostly the S&P and the NASDAQ, but still some constructive stuff happening here. Look at this. We actually have a gap fill going on back here in the Dow. The Dow actually, now that I look at it, has been kind of the more traditional, the traditional index, giving us a little bit more interesting patterns rather than the S&P, reaching way out on a limb and falling back. It's the last 2 days have been volatile. We can't turn around and get bearish on the last 2 days. I think in the long term, this very well can be constructive in the long term. Just kind of looking at those patterns and grinding back higher. Anything you wanted to add before we switch it up, Andy?
No, I think it's one thing I did want to talk about today is Spider. Something I noticed when we were selling off this morning, and Steve was actually we were doing a webinar, one of our support webinars when the Spiders. Thank you with pulling with that 15, and you had that little bounce there, and they got above the moving average there for a little bit. And this is something I've always done. I always look to see on the daily. Was there a reason? Was there a technical reason for the SPYs to bounce there? And they were kind of in no man's land. He's kind of putting the cursor. It was actually below that, Steve. It was quite a bit below that, and they were just kind of in no man. No, that would be a technical reason. It was put around 288.50. Okay. Right, 288.40, something like that. Yeah, it started to bounce, and I'm always looking at to see if there's a reason, because in more cases than not, guys, I can tell you, if there's not a technical reason, in other words, there's not good support, there's not a moving average there, the chances are it's going to roll back over until it finds that support. And it actually got close to the 50 today, didn't it, Steve? At one point.
Mm-hmm. Yeah.
Far from it at all. So. Just always be careful if you're used to, like, if you're buying the dip, make sure there's a technical reason, whether it's an index like the SPYs or it's a stock. If you're going to jump in front of that, train or falling knife, whatever you want to call it, just make sure there's a technical reason to it. And sure enough, the SPYs rolled back over and went much lower. So I'm always kind of looking for areas. Yeah, exactly. Look left and see if there's an area where it can bounce.
All right, good.
All right, but no. Other than that, yeah, you broke it down nicely there.
All right, I see there's a strategy coming in, but I'll ask again so we can have a couple to choose from if we need to. If somebody else wants to put a strategy question, there's another one, I believe. Oh, that's a question. In about 10 minutes, we'll try and create a strategy scan based on what you guys come up with. So again, there's another call for if somebody wants to send something in, we'll take a look at it. I see one that came in from David. I think we can do that, David, although your moving averages are not going to be exactly the way you want. You're asking for a 9 period and a 21. Well, we can do 8 and 20 on the SMAs and maybe build something closer. But let's see if anything else comes in that we can easily do. And I guess that's it. I'll send it over to you if you got anything you want to talk about on Holly.
All right, yeah, briefly. I mean, there was not a whole lot to talk about today, but let me go ahead and pull her up. All right, yeah, Holly, one thing I can say about it today is she had a much lower trade count than she's had in the last several days, which is kind of what you expect when you look at the Spiders. And we talk about gaps all the time and how it can throw off Holly's strategies, because a lot of these strategies are built on daily chart patterns, and when you get a nasty gap like this, it can throw off, like I said, a lot of the filters, that. And so the reason why I think you didn't see a lot of shorts today, but nonetheless, gaps are, we never have tried to hide this. Gaps are tough for Holly. And today, it wasn't a bad day. As a matter of fact, it was pretty much a flat day. All averages are pretty close to the break-even mark. So there were a few good trades. Actually, I think Holly 2.0, because this is what I like to look at. I like to look at the risk off, and get and I've told you guys before, I like to see a larger number of winners than I do loser, and that's a nice little breakdown. You had a couple of flat trades here, but other than that, you had about 6 decent winners and then only 3 losers. So even though she finished down on direct points, just barely 0.05, there was some opportunity here to definitely to the long side. I'm sorry, I shouldn't say the long side, but there were some opportunities in both directions there in Holly 2.0. So not as quite as bad as it appears. It's I'm not making excuses for Holly, but because we know, although last week she had a couple of really good days, about 3 real good days in a row. But things have gotten tough, and we are aware. That's one thing about trading, guys. Steve and I wrote an article one time for a publication about, what the only thing is constant is change, or something like that, Steve. Something like that.
Yeah, change is the only constant.
Change is the only constant. Yeah, and that's the truth. And we are working diligently on a lot of these strategies and some ideas on how I can make it more presentable and to benefit you more. So just want you guys to know, not getting crushed by any means. Still has a great record, but we know when things get a little bit stale, hey, it's time to put the grind to it and see what we can do, writing new strategies and coming up with different risk parameters and things like that. But we are at work hard on it.
Can I add something? Jamie
Sure.
always talks about his compare count windows this morning. They were showing a pretty good bias to the sell side, which they haven't for a while. And I always try and point out when the AI Holly can be used as a kind of a more macro, bigger picture item. And if Andy takes the Holly 2.0 and sorts by time of day, we had a little tip this morning. Not only were Jamie's compare count windows showing a lot more selling, the first 4 out of 5 trades this morning on a timeline basis were short sells. So when I see in the first hour, a definitive directional bias that the AI is showing us, I try to pay attention to that, and that did, portend some interesting action today, giving us a little early warning system. But I try and notice that whenever there's a real anomaly of directional bias in one way or the other.
Sure. Good points. But other than that, Steve, yeah, it's I'm not going to break down a bunch of trades here because it was kind of just a ho-hum day, nothing really to write home about. But so we could pass it back to you and see if we can't work on some of these strategies, come up with something.
All right, first we'll do that. First we'll look at the reason why no trade of the week came about and what we were thinking in the first place. So there's been a good scan as of late called the Andy created it with a section of filters that kind of looks for consolidating patterns and nice uptrends. The name of the scan was called Bull Flag, but it brought up something that really caught both of our eyes. And once I saw it, I kind of knew it. I'm going to do what I try and normally do here. There we go. Take it back to what it looked like on Friday. This is what it looked like on Friday. Everybody happily went into the weekend. I noticed on if we do, David, I'm not sure yet, if we do your scan, here's the moving averages like David's asking about, the 10 above the 20 above the 50, and so on and so forth. Excuse me, the 8 above the 20. Well, this is the 10, but we can filter for the 8. But this is what we want to see. This is beautiful fanning out of the moving averages. Then we have a nice anomaly back here, which of course was earnings. So the earnings gave a beautiful gap up, a reversal, intraday reversal, a nice bottoming tail, and then everybody that bought late got tested a little bit as the price came in a little bit, and we start to call this what we call a false retracement gap fill or a horseshoe, where the price is not quite able to come in and fill the majority of the gap. It starts to fill a little bit of the gap and then turn and move higher. And then when we see that, whether it's a fractal pattern on the intraday 15-minute chart or these are daily candles on the daily chart, I start to see patterns that I like this. And so usually these can kind of resolve into something that could move higher. If we were to get, there's the trigger spot right there. If we were to get that move higher, the trade would have gone live, and ideally the short sellers who thought they were in control here all of a sudden not in control. We've got the catalyst of the earnings behind us and good volume. This is usually a nice pattern, except when the market opens down 500 points like it did on Monday, and then gaps down again another 300 points today. We start to get a ton of setups that basically the rug gets pulled out from underneath them and they just dissolve into thin air. So, and that's fine. No trade is better than a trigger in a bad trade. So
Exactly.
there's no trade on for this week, and I don't know if this trade is even going to come back because the way it looks now, I don't like it. Here, I loved it. Here, we don't like it.
Maybe for gap fill.
Don't like. Yeah, but everything fell apart. Everything looked great there, but everything fell apart on Monday for the most part. And it's not so much the stock, but it was the general market gap down in general. There's the gap down, trade up. So even this guy didn't trade back up. Our stock trade week that did not trigger did not trade back up with the market. It just opened up, threw a couple of elbows, and then closed right where it opened. Waited for the next day. Today opened up, threw a couple of elbows, closed where it opened. That's not good action. We don't want that.
Nope.
So, but that was the genesis for it. Looking for stocks. If the market was going to continue to go higher, this one could have had an opportunity. But when the market craps, it takes everything out with it. All right, before I get to the choosing of the strategies to try and scan, somebody's asking a question, and really, when it comes down to the question of does Trade Ideas have this and does Trade Ideas have that, what I suggest you do is go to a configuration window, and somebody's asking about some fundamental data points here. Current ratio. Okay, ratio is a keyword. Let's type in ratio as a keyword. Okay, bid ask, relative volume, those are in ratios, running up, those are in. So there's really nothing that we have. I
You
believe.
got more, Steve. You can scroll down further.
Okay.
I don't think we have it, but you can scroll down and see what else we have.
Okay. Cash to debt ratio. Nope. So we don't have specifically what you're looking for. Current ratio, filter, total assets, total liabilities. I don't know if we have that, but let's look at the keyword liabilities. Now we're spelling it. It's not even coming up.
No,
total.
we're not going to, yeah.
So those are some fundamental data points that you're asking about that we don't appear to have. So I just wanted to show everybody the exercise. When you're not sure if we have or do not have something, come to the search window and type in the keyword and see if we have it. All right. So looks like David is the winner. He's the one who followed directions and sent in a scan out of curiosity. But I'm going to qualify this, David. It looks like you want us to, and I'm happy to do this, we can create a scan, but is there an event that you're looking for? Because if there's an event that you're looking for, we can create the scan first on a top list and kind of look at it, but I was hoping that we could find something that we could back test. So let's create the scan first, and then if there's an event that we can come to realize, then we can add that event and turn it into. David's asking, I'll read it out loud, asking for a scan. So I'm going to go to a top list of ideas as a scan, a set, and the stock price is under 30. The short float is above 20%, and so he's looking for short squeezes. The price is within 5% of a 52-week high. We can do that. And he's going to want the 9 period, but we'll substitute the 10 SMA above the 20 SMA. The price is between, okay, is between the 9 and the 21 EMA and the Bollinger Band. Well, you're adding a lot of at the end there. The Bollinger Band. So are you saying you want the price to be between the 10 period? I'm sorry, because we're going to scan for it. It's going to be the 8 period and the 20 period. You don't want the price above the fast 8 period. You want it to be in between. Okay, so we can do that. So we'll work backwards, and we're going to start by searching for the filters that we want. First one was price. Well, that one's obviously going to be in there. Short float is not part of that, so we'll grab short float percent. We can configure that. We're also going to want position of the 8-day, the 8-day SMA, which I told you we can't do the 9, but we can get close. Come on, Steve. Change from the 8-day SMA on a daily period. There it is in percent. That's the one we want. And we want the same thing for the 20-day SMA. Now you said something about Bollinger Bands. Is that a Bollinger Bands on the daily?
Well, he wants Bollinger Bands
inside the Kelly channel.
Yeah, we're not going to have.
Don't have. So we're going to leave Bollinger Bands out, but you could come back and maybe play with it. There is a Bollinger Band setting, but just be aware that we don't have standard deviation lines on our Bollinger Bands. It's basically a two-pronged filter. The 0 equals the low of the lower band, and 100 equals the value of the higher band. Now you can put in values like 110. Just as stocks will trade above that band or stretch the lower band. You can go below 0. You could do -10 to find the real extreme type of moves. You could even maybe put that on a 60-minute Bollinger Band to try and find stuff on a shorter time frequency that might give you some ideas. But let's work through what you gave us. The first thing you said was the price needs to be under 30. So let's do that. All right, price under 30, so maximum.
No, price greater than 30.
Price greater than 30, okay. Thank you. I should learn my greater than and less than. Alligator always eats the greater than value. So, okay, and then the short float is a big one. You want the short float above 20, I believe.
Mm-hmm.
Okay, 20% of the short float. Short float has to be at least 20% or greater, so that'll be our minimum value. And you had another good one, position in 52-week range. Position in 52-week range, position in year range right there. We're going to add that filter, and you want it to be 5%, so it's going to be 95% above the low, 5% from the high. It'll look like that. If we grab the check my work, it says the price is at least 95% above the low, which is the same way as saying it's 5% under the 52-week high. So there's that filter. Now we want to work on the 8 and 10. You want the price to be above the 20, so it's going to be a 0 value for the 20. We check our work. The price is above the 20. We're not going to put a cap on it unless we need to. But the price of the 8, it needs to be below the 8. So I guess if we put a 0 in the maximum, it tells us the price is below the 8. So I'm going to start with that. And then again, let's click hide the unused. So we have all of them in a nice view. We have everything here. It looks like minus the request that you had for Bollinger Bands. So we're not going to be able to do that, but let's see what it gives us. So exchanges, we'll do all of them.
Wait, Steve, before you move on.
Yeah. Mm-hmm.
David, confirm, do you want the 8 period above the 20 period SMA? Is that the way I read that?
Yeah, he did.
Okay.
But I don't know if we can do both, because the filter that we have is the price is in relation to. Now I'm thinking, we'll see what we come up with, unless you have a thought of how we
Well,
can
I do have a thought. It's kind of a workaround, and what you can do is you want the price to be the 8 to be above. So what you could do is do a minimum of 0 for the 8, and then to assure it's lower, you can do a minimum of, on the 20. You got the 0 on the wrong side. It's got to be on the left side, on the minimum side.
Because I'm confused. I have no idea how you're going to arrive at this.
Okay, yeah, I know it's kind of quirky, but this is the only way to do a workaround. Okay, so we know it has to be. I mean, I think this is going to appear in a lot. So if the 8 is above the 20, what you might try to do is do like a change from 20 SMA. You do like 3. So now we know the price is at least 3% above the 20. So we'll see what it looks like.
But he wants the price to be under the 8. and by putting
Oh,
a
he
zero
does?
in
No,
there,
I think he
yeah.
just said. I just think he just wants the 8 to be above the 20. If I.
Well, but he wants the 8 to be above the 20, but he wants the price to be under the 8. And
Oh,
so I don't think we can do both.
oh,
What
I
I was
missed that.
thinking,
Okay, my bad.
that's why I got confused. So
Yeah,
that's
I
why
am
I was
confused.
thinking we would have to do it like this. This ensures, I'm thinking that one will override the other. We'll just see. That's the buy zone he wants. So let's see what we got here. So I gave it a title. We'll just call this one's David's Scan. Let's see what we get. At the moment, we got nothing, but let's do historical date. Well, today at the close. I don't know if we're going to have anything at all today. Because ideally, we would have something here in the
Go
live
back to
always.
configuration and try doing what you did. You put the 0 on the
Below the 8.
and above and
Above the 20.
maybe try putting the 20 at. Oh, he wants to.
Let's take that out altogether and let's see what's above the 20. There's a couple things. So that's what it was. There's only 2 things coming through that are matching all of your criteria of low flow. Now, this one looks extremely interesting. Sanderson Farms. Look at that.
Mm-hmm.
Giant fake out on the open, typical god dang stop run from the algos right on the open, and then closes near highs, ran out all these stops, boom, 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 and then popped right back up. This is very interesting to me. But where we go from here with this scan is kind of tough. It's just it's giving us a list of curated ideas, which is great because now it comes up to the discretionary trader, to determine if they want them. There was that moment in time where it zipped down between the 8 and the 20, but very shortly, David. So maybe it's just more of the market conditions today that are not giving us a whole lot of returns, but that would be the general idea.
Try doing this, Steve. Try going back to about 3 days ago when the market was close to highs. I think what happened is you got this downward pull. You're not going to have probably too many stocks in the upper 5% of the 52.
That was only one on last Thursday. Go back to which day? That was the 2nd. I could do Friday the 3rd, see what that looked like at 12:55 p.m. Okay, there's a few of them.
There's a few more there.
So on Friday we were getting a few more, but again, I don't have that. There's your buy zone there. It's between the 8 and the 20. Let me go back to that configure and see if we can get that history to pull up at least 1 or 2 using that 8 period. This value right there, below the 8. Will that give us anything? No. It seems to be a tall order for the most part. Getting a lot of stuff to come into that.
Yeah, let me go back and read it and see what could be causing the problem.
General idea is a strong trending stock that is consolidating.
Well, here, let's try this, Steve. Let's try this. Just take out the short flow real quick and see what happens.
Yeah.
Just to see if that helps a little bit.
Probably get a lot. Short float. Take that out. We'll get a lot more.
Let's see what we got.
We'll go live today as well. Yeah, got a few of them in there today.
Yeah, got a few more there.
That's consolidation.
So
on that
now you got some stuff that's kind of working there.
And so let's play around with something like this here. Look at this. 1, 2, 3, 4, 5. So what I was trying to get at earlier is, what happens if you were to, we can take all of this, collaborate means I'm going to take all the filter settings. I'm going to open now a new alert window. And in that alert window, I'm going to start from scratch and just launch it. I need to at least select something. Okay. And now I'm going to paste in all those filter settings that we just had by going to collaborate, paste all. And now I'm going to change to something called a new high. And that new high is going to have a delineation. Show me all the new highs, but with a twist. I want these to be like a breakout, right? So we'll say like a new 5-day high. So now that we have, an event, Did we get anything today? Probably not, but let's look at a time frame. Let's go back.
Or you could probably just do all.
Yeah, I'll just do all, history all. Thank you. And so looking for a 5-day breakout.
Well, here's the problem. You're probably breaking out of a 5-day high. You're probably getting above the 8-period moving average now.
Here
Oh no,
something.
that's PayPal.
I really liked PayPal this day way back here.
Yep.
So it's been a while, but PayPal did break out of a 5-day high on that day, it looks like, and there was some other stuff. So that didn't work, obviously. But what I wanted to do was take it to the next step and then say, well, let's see if we were to go ahead and back test something like this, maybe for an all-day hold, for a 90-minute hold with some simple risk management, and let's just see what would happen. I don't think we're getting a lot of trades. It looks like we're going to get maybe just a handful of them, and it makes it hard.
Yeah, the problem is an 8-day high. You're going to have so many stocks that are above that 8-period moving average.
Let's try a little something here. Let's try just a 3-day high.
Okay.
See if that changes anything. We'll go back and back test it. Everything else being normal. See if we can get more than 8 trades out of there. Because what I had hoped to do today, guys, and we are doing it. I don't hope to do it. We are doing it. Is create an idea out of thin air and look at some of the concepts. Here's 33 trades. It's not a lot. Maybe there's something we can do to optimize. And here's where I was going to eventually go, to the optimizing tab. And time of day is always really interesting. Let's look at 15-minute intervals throughout time of the day. Actually, not. We'll go back to 30. And it looks like this stuff works really good in the first part of the day. So look at this. After 8:29 my time, these 5-10 trades are diminishing returns. So if we simply run this again as a morning strategy and just cap it at 8:30 my time and no more trades after 8:30, it's not a great data set to work with, guys. We would like to have a bigger data set.
Oh,
but,
yeah.
This will improve it a little bit because we know the time of day, we got a little better trades in there now. So there's some decent stuff. Again, just looking at how many trades over the course of 64 days, we had 24 trades, so 1 trade every 3 days or so. Buying a new high with those filters would give us a 3-day high, would give us some decent returns. And of course, you can really go down the rabbit hole in other features, compared to what the S&P is doing today and all this. You can optimize doing the same thing. And that was my hope, that we'd have a bigger data set, but still, those are the steps. And so if somebody's watching and they've got something in their mind that they want to try out, if you can work a way to get that into an alert window, you can back test it, and then you can start to do that time of day optimizing and even price optimizing as well. But I think time of day optimizing is the most interesting of all of them. You can really weed out a lot of bad stuff.
And David makes a good point. He says, I'll have to sign up for another 30 days to see if I get smart. And that's what it takes, David. I can't tell you how many hundreds of hours, spent back testing, and you get so much better at it, and you start to familiarize yourself with all the many different filters that we have, and it can really get really powerful. But Steve's right. You need a much higher, data set.
And then once you get that period of time, okay, so 8:30 on that last example run, that's a 120 minutes of open time. So rather than have to remember that, just go to a time of day filter and add that filter to time of day minutes. If I don't want to start for the first 5 minutes, I can put that in there, which means I won't see any alerts in the first 5 minutes, and then after 5 minutes, the alert will become active, and the alert will stop showing me new ideas after 120 minutes. And this value, of course, was derived by looking back on the back testing and seeing that after 120 minutes, this particular method had some diminishing returns and didn't really work. So that last filter can kind of tie it all together for people once you've back tested something and found the optimum time of day.
Mm-hmm.
All right, so we have a few minutes before we bring Scott back. As promised, we will look at any questions you guys have. So Q&A basically for the test drive people. I know there's some new people in here, and if somebody was sitting on a question, by all means, go ahead and ask it. Somebody else might be thinking of the same question, or you're not thinking of the question, and somebody's question actually put a light bulb off in your mind because you never thought of that. But we'll open up the floor here for a couple minutes if anybody has anything they want to run by us or questions on the test drive. While I'm doing that, I will make a quick demonstration. Some of you have heard there is a contest. The contest we use is our price alert. Price alert is the P window, and we set those by right-clicking and setting alerts in a trade window. Well, we have a contest every test drive where you can set 5 of these. I'm just going to do a quick example here. You set 5 working alerts, 1, 2, 3, 4, 5, and the rules are you want to submit them tomorrow after the bell, and don't let them trigger an aftermarket because that will disqualify you. But tomorrow evening, if you want to send in the contest, just find the contest rules in your email. You can essentially grab the 5 alerts that you set, and the idea is to let them trigger during the market on Thursday and Friday, and then right at the close on Friday, we will timestamp all the ones that triggered that were submitted, and the person that has the best winning percent based on win percentage will win the grand prize. And so to submit your alerts tomorrow evening after the market, after market is even closed, find the 5 alerts that you think are going to trigger on Thursday, highlight them, and then you go like this. You just basically highlight and share the 5 selected. This right here is the stage you need to get to submit your contest entries. Click copy all and then go to the contest entry window and then right click and paste that cloud code. And then that will be your entry. And on Friday, me and Jamie and Sean and Andy will get a spreadsheet of all the entries divided up, and we will timestamp them right at the close on Friday and see who wins and then let you guys know. All right, any questions? David says, will we get a promo code? Yeah, you keep an eye out for promo codes in the email. I know that Scott's going to have one today, but I also know that Scott might have something up his sleeve after this weekend. There might be another one slipping out in the email. You could keep an eye out for that as well. That's for David's question. All right, any other questions before I do turn it over back to Scott? Options, occasionally, you know, Sean is our resident options guru. Sean McLaughlin, he's pretty good. He's not in the webinar, unfortunately, today. We don't have a lot of scans available for options other than, again, if you go to new alert window and just type in the keyword option, you'll see that we do manage a lot of put and call type of volume scans, and that's pretty much going to be it. You know, I like to swing trade if there's a situation where I don't feel like risking, you know, dollar for dollar on the underlying stock. You know, 2 or 3 months down the road, if there's something that I feel is a long-term play, yeah, we could look at options, but I'm not skilled in the way of Sean and knowing all the different Greek alphabets and all that stuff. All right, well, it looks like that's it for questions. So I'm not seeing any new ones, so I'm gonna go ahead and bring in Scott and bring up the tile slide here again, and he's got some announcements for the way out.
Yeah, right on. Thank you. Another reminder that the test drive is going on, but you can still sign up through midnight tomorrow night. So if you are thinking about trying it, just go ahead and sign up. You'll still get 5 full days. If you sign up today or tomorrow, it'll extend into next week. So you still have 5 days of the trial. Just go to trade-ideas.com/test drive and reserve it and get going. There's a podcast. We should have a new episode up on Friday, so stay tuned for that. Just search for Trade Ideas Podcast in the application you listen to your podcast in, and it should pop up. Then hit the subscribe button to get all the updates and new ones. There's a ebook. It's got 5 chapters. Each chapter has a way to win in a post-BTFD market. Steve and Andy both contributed chapters to it, so check it out, trade-ideas.com/ebook. Plug in your email address, get the download link. If you have any questions, there is a product code, Spring for Holly, all caps. It's case sensitive. Will save you 15% off the first month or year of any Trade Ideas subscription or Brokerage Plus. You can also use this to do an upgrade. So if you're on standard and you want to get into premium, just use that code and save. You can follow Steve at Today Trader on Twitter. We've also got at Trade Ideas, facebook.com/TradeIdeasPros, the Facebook page to like. Any questions, email info@trade-ideas.com. That is still the best place to ask questions. It goes into our help desk software, which goes to the appropriate team member to answer your question. We'll have a recording up later on tonight or tomorrow. You get an email reminder about how to find it. And thanks, everyone. Thanks, Andy. Thanks, Steve. Have a good one.
See you next time.
All right. Thanks, everybody.